One strategy eliminates a losing streak. Hey, for those of you who don't know me, I'm Rob, and for those of you who do know me, welcome back to the show. Today, I'm just going to go over the one strategy, the one thing that will eliminate that trading losing streak. It's a system or a strategy that I've used for the last 30 years. It's worked for me and it could possibly work for you as well. Now, here's the thing, guys. Here's the big thing. And don't forget this. It's not about squiggly lines. It's not about a win rate. And it's not about all those little things that they tell you to do with candles and patterns and so on and so on. If you want, I'll show you the charts. In fact, we'll go to the charts like we always do, and we'll have a look at the system that you can use, the probability system, the strategy that will give you a probability trade. But that's not what makes you money in the markets. That's not what makes you money trading Forex. That's not what makes you money trading indexes. It's not what makes you money trading anything. A lot of you trade crypto as well. Makes no difference. It's all the same. Because at the end of the day, it's all about how you approach your trading. What's your mindset when you are actually trading in the markets? How do you approach your trades? Do you have a business plan? Do you have any kind of business plan whatsoever as to how you're going to trade in the markets? Or have you just gone and taken a course which you've paid, I don't know, thousands of dollars for, and you've taken that course and you've gone through the course and you've done all the little goodies and whatnot, and you've walked out of there and said, I'm a professional trader now. I know how to trade now. Nothing's going to touch me. And then you go and you put money into a brokerage account and you're ready to now trade with gear trading nogal. And you take your first trade and all of a sudden everything changes. All of a sudden this rush of emotion comes over you and this fear and this adrenaline, and you realize you're in a different ball game. This is not the course that you were on. This is not the $2,000 course or $5,000 course that you were on, where it was so easy to take a trade. Suddenly, it's near impossible. Suddenly, you're trying to get out of the trades as quickly as possible. Suddenly, you're afraid of losing. What's that all about? Well, it's quite simple, really. Trading is all in the mind. It's all psychology. It's got nothing to do with the candles. It's got nothing to do with the squiggly lines, and it's got nothing to do with the high probability system that you've got that's supposed to be giving you winning trades. It's got nothing to do with a win rate. And would you believe that trading is a 50-50 game? But the sooner you understand that it's a 50-50 game, the sooner you'll have a successful trade. The sooner you'll be able to take the strategy and implement it into your daily use. Now, most of you have learned how to trade the stock market based on a system that's been given to you on squiggly lines, and you must just follow that system to the T, and that's what's going to make you the money. But unfortunately, that's not the case. So let's go and have a look at the high probability system with the charts, and then we continue on talking about the strategy that's going to make you a successful trader. You need a system that's going to give you a high probability win rate. You can't just rely on your psychology, obviously. But at the end of the day, the system that I'm showing you obviously teaches you that it's you that makes the difference at the end of the day. So if I put two traders in the same room and we trade the same system, you're not necessarily going to achieve the same result. Unfortunately, that's just the way it works. But if you're looking for a system that's going to help you to win in the long run, what you need to do is just look at price action. Because even with no system at all, you could take a trade, you could choose a trade, you could say, I say this trade's going to go short, and you could have no system whatsoever, and you've got a 50% chance of winning, because there are buyers and sellers in the market, and all of them have got opposing views as to which way the market's going to turn, which way the market's going to go, whether a trade's going to be long or short. Everybody's got their view, guys. So I just look at price action, I just look at the system, and I say, I think that's where it's going to go. Now, the best way to go about it is to draw support and resistance in. You just go to the day chart and you go to the line chart. The reason I use the line charts, I always tell you guys, the reason I use the line charts is because on the line charts, you get the closing prices, whereas on the candles, you do not get the closing prices, you get the highs and the lows. And I don't like to use the highs and the lows to get my levels. What I'm looking for on this chart. And I just took the first chart that opened here because it was open this morning. This is the South African top 40. That's fine. Doesn't matter. Any chart. You can take Bitcoin. You can, any chart you want. Right. So this is in a bullish trend. You can see that because guess what? It's going up, isn't it? It's going up. It's on the day. So we know that on the day chart, we've got a upward trend, which is a bullish trend. Bulls are up, bears are down. So we want to draw in a nice resistance level. Now, a lot of guys in the old days and everywhere you go would draw just a straight line in here. But you can't really draw a straight line in the sand and say, well, that's my level. And also don't end up drawing millions of lines on your chart because it becomes very difficult to read and very confusing. All you do is you say, well, there's a resistance level because I can see there's a few points here. A resistance level, it's like a magnet where the price gets to and it always comes back. You can go back and see if there's anything further back, but there really isn't. So I'm just going to take this last little piece here and say, do you know what? That's more than likely my best case scenario resistance level. Is there a support level? Yes, there is. There's a support level down here. So I'm going to draw that in. It keeps coming to here, keeps coming to here, keeps coming to here. So this is a level that it likes to get to. So we'll call that the support level. That's an area where price likes to get to. It's a magnet. It gets there, turns around, goes the other way. That's your range. But over and above your range on this particular trade, you also have a trend resistance. Now you can draw a trend in if it touches on 3 points. 3 points is all you need. What have we got here? 1, 2, 3, and now 4. It's breaking through a little bit. Not too concerned about that, but normally when it does break through, that means it's bearish and it's going down. So that gives you a good idea. The upper side has also got a trend. See here, it's got a trend. So that's your railway line. So that's your bullish trend, right? The trend is your friend. We trade 3 ways. We trade in the trend, we trade in a range, and we counter trade. If something breaks the structure, then we can go the other way. We don't just trade because we think the price is expensive or cheap. Now, we have this trading in a trend. Now I can take it back to the candles. Why do I use candles? I use red and green candles, not any other color, red and green candles, because I can clearly see that's a bearish candle coming off the resistance. That's a bullish candle coming off the support. If I see a closed bullish candle coming off my support, I buy. If I see a bearish candle coming off my resistance, I sell. It's really simple at the end of the day. I don't overcomplicate it. I don't wait for the moon to turn green and the stars to align on the left or the right or anything like that. I simply look for a closed green candle, a closed red candle off those levels. That gives me a trade. Where I will be cautious is if I get a breakthrough on a level. If it breaks through a level, I wait for it to retest the level. So for example, here it comes through, breaks that level, comes back, retests. Then I know it's strong if it goes out and goes the other way. So that's all you need to do. Now we're going to trade on the 4-hour chart. You can trade on any time frame that you like. Just remember, guys, if you're trading on the 5-minute time frames, 99% of traders lose money on the 5-minute time frames. That has been proven and over again. So please understand, 5-minute time frames are deadly. Even the normal swing trading, 4-hour time frames, daily, etc., position trading, 70 to 80% of traders do lose money. Now you can see this SA Top 40 is in a trend. It's also got a support here and it's got a resistance here. Now you can take trades. The problem with this particular product is it's now in the middle between its 2 trends. That's your daily resistance, that's your daily support. So where do you take the trade here? Well, we've just gone and drawn our trend support in and our trend resistance, which gives us what? Gives us some new insight into the trade. What I can see here, this is a red candle, so I'm not going to go long just yet. But if this gives me a green candle off here, I've got a long trade going back up to the resistance because it's bouncing off the trend support. If it breaks through this trend support and gives me a red candle down, we can go short down to the main support. Simple. No complicated stories or anything like that. Once you get used to this kind of trading, then you can look for supply levels and demand levels. If you want to know more about those, go and look at my videos. I do have videos on supply and demand, fair value gaps, even Fibonacci in my series. If you want to look at those systems, you can. If you want to get more complicated, just remember, guys, the more systems that you add into your trading, the more you overcomplicate it, the more you confuse your brain, the more you confuse yourself. Believe me, that's how it works. You will always confuse yourself. But let me just point something out very nicely here. What we have here on the 4-hour chart is this is a demand level. This is an area where money is lying. You see that going up there? It's a demand level. This money hasn't actually been taken because it did come back to try and retest, but didn't reach it. And it carried on. It's actually come down and found this money. This money, there's a lot of money lying in this area. And that's in confluence with this trend support. There's a very good chance that this could bounce off this area and go long. So that's how we trade with resistance, support, price action, trend support. And then I just showed you a demand level. That comes from supply and demand. Go and watch my supply and demand videos if you want to know more about that. And understand that confluence can really help a trade, because if you've got two things telling you that that's what might happen, it kind of makes it more of a confirmation that it's a really high probability trade, and there's a good possibility that trade could work out. So now you've seen the chart system. Now you've seen the system on the charts. But how do you actually take a trade? How do you actually become successful and profitable in the markets? Well, it's pretty simple, really, guys. And it's a two-step business plan. I've repeated it over and over again in my videos, and I'm going to repeat it again. Before we go there, just remember trading is risky. And if you don't like losing money and you don't like risk, you probably shouldn't be trading. What you're doing here in that case. By the way, I got a free Forex book for you in the description. Go and grab it. Right. So as I was saying, the strategy is this. What you have to do is on every single trade that you take, you've got to take the same amount of loss, and you've got to learn to lose, because the principle is simple. The principle is make more on your wins, lose less on your losses. But how do you do that? Well, really simple, really. You say, let's say I've got a $100,000 account. Now, don't shoot me for saying that, because some people have got $5,000 accounts, some people have got $2,000. It doesn't matter. 1% of your account, whatever that might be. But I'm going to use $100,000. This is a nice big round figure, and the 1% is easy to calculate on it as well, because, you know, it's maths. So what's 1% of $100,000? $1,000, right? So you're going to risk $1,000 on every single trade, no matter what. Doesn't matter. Don't favorite one trade over another. Just 1% on every single trade. So now you got $1,000 loss every trade. What you do, you enter the trade. You go into the trade and you look at it and you say, where would $1,000 be where if this trade was invalid? Where would my stop loss be if this trade was invalid? Where would I want to put my stop loss? Right, I want to put my stop loss here. Work out how much $1,000 is back to the cost of the trade. Once you've worked that out, work out how many contracts you're going to buy on that trade. And then obviously you want the trade to pay you 1.5 to 1, 2 to 1, 3 to 1, somewhere in those lines. You want the trade to give you much more profit than it's going to give you loss. And I'll explain that in a minute as to why we need that. Why do we need that? The trade goes into profit. If it goes into loss and it takes the $1,000, you've got to let it take the $1,000, guys. You can't move the stop loss away. If it goes into loss, take the loss. It's gone. It's over. It is no more. Do not dollar cost average. It always ends in tears. If you don't believe me, do your own research. Dollar cost averaging ends in tears unless you really have the discipline to control it, because the losses build up, the wins don't. Here we go. Now you're going to profit, which is great. You've got a trade that's gone into profit. What you do now, you move your stop loss up to break even. Only when you're in a decent profit, obviously, like $700-800, okay? Then you put your stop loss up to break even or just above it, and then you start following your profit up. When it gets close to target, you want to move your stop loss up right behind it. And if it comes back and takes it out, well, no big deal, really, because at the end of the day, that's what you wanted in the first place. So now your stop loss has taken out your profit is taking out your stop loss in profit. Let's say I'm getting all tongue tangled today. You go up to your target level, the price comes back, takes out your stop loss, pretty much where your target was. So you're a happy chappy, because effectively you've actually made what you wanted to make in the first place, which is 2 to 1, whatever the case. And that's the simplicity of the stop loss, because the reason I say to you is keep the stop loss the same on every single trade and don't move it away and don't dollar cost average, is because out of 10 trades, if we believe that the stock market is a 50-50 game because it's made up of buyers and it's made up of sellers, then we have to believe that for every 10 trades we take, we're going to lose 5, we're going to win 5. But we don't want to end up on zero if we lose 5 and win 5. We want to end up with a profit. And how can we end with a profit if we're losing 5 and winning 5? Pretty simple. The strategy I just gave you, the business plan I just gave you, you make 2 for every win and you lose 1 for every loss. So on a 10 trade basis, you will lose 5 on the 5 losses and win 10 on the 5 wins, which gives you a win of 5. Simple maths, really. Gives you profit margin. And that's what you're looking for. Now, in reality, you're going to have a whole mishmash of wins and a whole mishmash of little losses, because you're going to move your stop loss up into profit so that the trade costs you nothing, so that you're not losing $1,000 every time. Sometimes you lose nothing. Get a free trade because you moved your stop loss up. Great stuff. Sometimes you just make a half profit instead of a full profit. So you get a whole mishmash of smaller profits because of stop loss coming back and taking out those trades, and 1 or 2 trades or a few trades that have been taken out actually by stop loss, or trades that have been taken out on smaller stop losses because you've moved your stop loss up. You'll have a whole load of those, and then you'll have a win rate, and you're going to go, look at my win rate, it's really good. But the win rate is meaningless because you're actually in a loss. So forget about the win rate. Start looking at the profitability of your overall business, of your overall trades. It's a simple thing, really. Whether you're trading on 5-minute charts, whether you're trading on 4-hour charts, whether you're trading on day charts, it really doesn't matter, guys. At the end of the day, you're going to use the same principle. And the principle is keep the stop loss the same and make more on your profits. That's the simple basis of the system. And if the stop loss gets taken out, take the stop loss, walk away. You know, the possibility on the higher time frames of losing 10 trades in a row is gargantuanly, it's just not, it can't happen. It shouldn't happen. If it does, it's just bad luck. It's gargantuan bad luck for that to happen. Same as if you were to win 10 trades in a row. Wow, is that so difficult? You just can't do it so easily, no matter what your system is or how special your system is. You're not just going to go out there and win 10 trades in a row. Nobody does. Nobody does. It's not that easy. That's why we have a 50-50 game. Chances of winning 5, chances of losing 5. You just got to make more on the wins. Now, it's not necessarily that you're going to win all 5 trades really well, but 1 or 2 of them just need to run well, and suddenly everything changes. Suddenly you've covered all the losses. You've made a profit and you're running all the way to the bank. You just need 1 or 2 to run well and life is great. And if you look at the charts, you'll see there is a few trades that will do that for you, whether it's short or whether it's long. So I hope that assists you in your trading. I hope that is helpful to you. And I want you to come back and watch the live show with me tomorrow. Hopefully we'll be around for the early Euro session, and you're welcome to have a chat or put your questions in the chat and we chat about it back and forward. I'm not one of those guys who sits with the 5-minute charts and they bounce up and down and keep you occupied with things moving on the screen. I do have the charts up, but it's a swing trading, it's a 4-hour, and we chat about trading and we talk about the truths of trading, which is the reality of trading. Let's say that you're not going to make $1 million in a day or a week or even a year. It's a career. You actually have to learn how to trade, by the way. Not that simple. And it's all up here in the mind. I can show you 1,000,000 different systems to trade with, but that's not what's going to make you profitable in the market. What will make you profitable in the market is you. End of the day, you. You cannot copy trade some other trader. You can't take my system and run it to the T and expect to get the same result, because you won't, you never will. But all these guys out there toting, just follow my system to the T exactly and check out the millions I make and check this, check how many millions I made today, and you get all involved in it and you lose and you wonder why. And it's simple. It's because you don't have the same personality as that guy. You don't have the same trading approach as that guy, and he's probably lying to you anyway. So guys, thanks for watching. Don't forget, come back for the live show tomorrow, and I hope everything has helped you in the right direction today. If you want to know how to draw those support and resistance lines properly, check out my last video here. It'll give you all the details. Cheers guys, ciao and bye.